We are joined here by Julian, Pagora, and Forrest Hoddle. You can see here we got them. They've been very patient, as I hope you guys have been as well. So let's move on. So the next slide. We'll skip. We'll go through this one quickly. The why Bitcoin is the three main factors. I think the inflation protection baked into Bitcoin's scarcity, the censorship resistance, meaning your wallets cannot be seized, your Bitcoin and property cannot be seized, and your transactions cannot be stopped. And we know all this to be true because Bitcoin is governed by math, not man. Man changes their opinions. Man has enemies. Math is just math. Math is transparent. Math is what enables your money to be for you and for your enemies. Let's move on to the next slide. So yes, the main kind of theme of today's educational portion of the webinar is that Bitcoin, the price has gone down, but all the things that make Bitcoin what it is are completely unchanged. And if anything, those things have improved over the course of the year, despite the price falling. So we got scarcity that's never going away. Bitcoin's always gonna have a max supply of 21 million Bitcoin. So even if the price is going down, you're still owning an incredibly scarce asset. All that means is if you're buying Bitcoin every other week or every week with your paycheck, you're getting more Bitcoin for your dollar. So you're kind of winning. Let's go on to the next slide. And this is super, super important because if Bitcoin could just be taken away from you, then it loses a lot of its power. Bitcoin exists outside of the sovereignty of any nation. It exists outside the legal system. And while that might sound scary to some folks that are a little bit new, what that really means is that the government, if the government ever deems you to be an enemy of the state or a political opponent, they cannot seize your financial assets. This gives you unrivaled freedom and independence because you can actually support causes, that whatever cause that you want, without being interfered, without being censored. And if you've ever had a transaction get blocked, if you've donated to the truckers or to an international cause that you receive domestic repercussions, Bitcoin is the ultimate tool to allow you to safely do that and ensure that your money is actually going to reach its destination. So let's go to the next slide. How do I know these things? How does Julian, Forrest, and Zach also know these things to be true? It's because we're not because we're magic, but it's because Bitcoin is written in math. Bitcoin is written in code. Bitcoin's rules are mathematically described. And all of this basically ensures that the rules for Bitcoin, such as the 21 million limit, the censorship resistance, or only permitting valid transactions to go through, this is something that's baked into the code. This is something that is kind of unchanging. Like, we can, as a group, all collectively decide to change certain portions of Bitcoin, but the overall entire machine is always going to remain as it is. And that's really important because, look at any country's history. In the last 20 years, there's been a lot of political changes. You have maybe a flip-flopping of political leaders, a flip-flopping of policies. That creates a lot of confusion about what the future could be and makes it challenging to prepare accordingly for the future. But with Bitcoin, we know that many things about Bitcoin is going to stay the same, and math guarantees that. But basically, if you're trusting in Bitcoin, you're trusting in math, not in man. And I think math is more trustworthy. Let's go on to the next slide. How do you buy Bitcoin? It's actually super, super easy. It's easier than a lot of things that you may have had to buy in the past. Like, it's not like buying a house. It can almost be more like buying a chocolate bar. You just send money and you get the thing. You receive it right away. If you use a place like Bitcoin Well, we don't hold on to your Bitcoin. We give you your chocolate, so to say, right away. You give us the dollars, we send you the Bitcoin directly to your wallet that you control. And that is kind of the best way to buy Bitcoin. You're not having to worry about trusting someone else's Bitcoin wallet security. All you have is your own Bitcoin wallet, and there's no one that can hack Bitcoin wallets. Given the code, given the censorship resistance, your assets cannot be seized from you. Let's move on as well to the next slide. Oh wait, why is this slide there? Is this not right? Okay, let's skip ahead if you could, Zach, to slide 13. I think we basically are good on the majority of what Bitcoin is, why Bitcoin is the way it is. And we kind of just want to reflect on the, are you not looking at the same slide deck? Okay, yeah, there we go. There's just a few more. So now we're approaching the fireside chat after an unfortunate little delay and mix up on my end. Zach, if you're seeing the 13th slide, should be like the fireside chat slide. Unless I'm getting different numbers on my end. Let's see. Okay. Digital fireside chat. So now we're all Bitcoiners here. If we're talking about Bitcoin on Christmas time, then we probably know what Bitcoin is. And I think now is the interesting time to reflect on the year. I know when a lot of us were starting out the year in 2025, the Bitcoin price was having a lot of momentum from the year before. They're just to set the stage. Donald Trump election was coming through, and there was a lot of promises for Bitcoin treasuries on a government level, on a state level, federal level in the United States, and that led to a lot of follow-up where other countries, other political leaders were making propositions for Bitcoin treasuries for their own country, municipality, state, whatever it may be, and we saw a lot of hype for that, but we didn't see so much follow through. I think some of us might have expected more follow through. So I think maybe that's an interesting place to start it off, because that's kind of where we were starting the year out. What's it, Julian, Forrest, everyone, Zach, Yuli, what are your guys' thoughts on the how federal treasuries or government run treasuries? Like, are we expecting those things to kind of fall through? Do we think that's more of an announcement? Was that more just like a voter tactic to get some of the Bitcoiners to vote for Republicans, or what are we thinking there for 2026?
I think, well, for 2025, I'll just add on to what you're saying there. A lot of the price was built on hype, and even when we saw Donald Trump get elected, I think Bitcoin went up like $20,000 in like 1 month, right? It was crazy. And that's all expectation of specific things to happen. And basically, we've seen none of those happen. And what happens when there's speculation within the market is that attracts a certain type of holder. And that holder doesn't have the long-term vision of understanding the consequence of only having 21 million Bitcoin, and how everything is written in code, and it's almost like it's incredibly difficult to change Bitcoin, and Bitcoin has to have massive consensus to be changed. So you have something that's ultimately incredibly stable and is competing to become the monetary network of the world. So it attracts a certain type of investor, right? It attracts a short-term speculator, essentially. So we had a little bit of fervor with that, and those people have left. I mean, we've had incredible other narratives, right, within within other markets. We've had the AI trade, and people that are investing in Bitcoin for the fiat gains, which there are many of them, right? There's tons of people investing in Bitcoin for dollar go up. They're not thinking about the long-term vision of it and how it can actually create a fair system and change the entire world, right? They're just looking at it, oh, well, if I buy it at 90,000, it goes to 200, well, there we go, I'm rich, right? So that's what they're thinking about. But when that narrative begins to show a little bit of crack, so, well, maybe it's, going to be next year instead. Well, people are okay, well, I'm going to try to jump on a faster horse. I'm going to hop on NVIDIA. I'm going to buy silver because there's going to be a commodity shortage, whatever, right? So when something is just built off of narrative, when price action is just built off of speculative hype narrative, that's really not much underlying it. And you can expect there to be a retracement if that's all that's there, right? But we know that the fundamentals of Bitcoin, as you said, are strong, incredibly strong. And week after week, the same people that understand Bitcoin are buying more of it. And eventually those people that bought Bitcoin for a speculative trade, they sell their Bitcoin into the market, and then they have no more Bitcoin to sell, right? So they become exhausted. That's what happens with markets, is the sellers eventually become exhausted, and then because price is always determined on the margin, and when there's not as many sellers as buyers, there's more buyers than sellers, that's when price goes back up. So it's not going to be we'll probably create some narrative when Bitcoin goes back up, we'll create some narrative of why, but largely it's because all the sellers will have been exhausted at that point.
Julian, you got anything else there to add regarding Bitcoin's moves for this year?
Yeah, I think one of the things that I've started to look at a little bit more over the years is sort of what is the lowest fiat price that Bitcoin hits in a given year, and how does that compare to the previous years? And I think similar to what Forrest is saying, like that gives you a much better signal on where we are in the market. Speculators tourists who are here just for, you know, a quick trade or like a small flip over like a 1-2 year duration, versus the long-term holders. The long-term holders are the ones who set that floor. Basically, like, they are the ones who provide the supply to the people who, you know, want Bitcoin. And essentially, if they're not selling their Bitcoin, the floor is perpetually higher. And I think only 2 or 3 years of Bitcoin's history has the lowest price of the year been lower than the previous year. And I think this year the lowest price was like 72 or 73,000 US, but it was a lot lower, I believe, last year. I believe last year the lowest price was like 40 or something. So I look at that, you know, this year has been kind of a disappointment for many, but honestly, I want to give myself a bit of credit. Even though I paid the price last year, I made a bet with someone that Bitcoin wouldn't hit 100K. And I said, if it did hit 100K in 24, I would eat 2 Carolina Reaper peppers, and I paid the price. But my thinking on that was essentially that I think everyone thinks that this flood of money is actually going to come within 1 year or 2 years to Bitcoin. And I think it's going to be like a longer drawn out process for people to realize the value of this asset. I also think that people think that Bitcoin acts alone in this store of value narrative. And I think we've seen very clearly this year that people still have a lot of choices. I think gold and silver have made really compelling arguments as stores of value. And if you don't care about the custody part, if you trust your brokerage, which I don't think there's been any reason people to not trust their brokerage, you're going to buy that asset that's outperforming Bitcoin at the time. So Bitcoin, it thrives on 2 things. I think it thrives on people's optimism for the future and for all the things coming to Bitcoin, but it also thrives on people's fear. And, you know, all things going on in the world, it's been a pretty optimistic year. And I think there hasn't really been a fear out of, you know, custodial assets or trusting custodians in the last year or 2 years, you know, with money. There hasn't been asset forfeitures. There hasn't been asset seizures. Bitcoin, you know, as much as we love it, like it does benefit from that because we know about all the immutable properties, as much as it does sometimes benefit from all the, you know, the debasement trade stuff. So it has a lot of competition in the debasement trade space right now. And I would say that probably is why it didn't perform as well as we thought it would. But we know over the long term, all of the properties of it make it the apex asset of the debasement trade. It will just take a little bit longer, I think, for more people to realize that. And I think also you're seeing people who never took that asset, Bitcoin, seriously, start to take it seriously beginning this year. And I think it takes quite a few years before people decide to move billions of dollars into something. We're not all Michael Saylor. We can't all read one book and full port our company into it. It takes a while. And I think we have to practice some patience.
Yeah, you mentioned something really interesting. Zach, if you could please move to slide 15 regarding the debasement trade, or kind of like the move to like traditional inflation hedge assets. And what I've noticed, and so if folks that are looking at the screen, you can see here 3 prices. Blue and green are gold and silver, and orange, of course, is Bitcoin. And Bitcoin's having a little bit of a down year, which is kind of why we're talking a little bit about price. So according to this, it looks like there is some sort of drive towards the inflation-resistant metals, or, you know, the precious metals, and that seems to kind of be coinciding with a sell-off in Bitcoin. I would argue that, yeah, this is, I think, something that's super early. Like, Bitcoin should, in principle, and based off of like how us Bitcoiners view Bitcoin's you know, monetary properties and scarcity properties, Bitcoin should be moving with gold and silver. And I would argue that that's because most people still don't really know what Bitcoin truly is. Like, Julian, I 100% agree. And this thing that I've been saying as well is that this was the year where the Bitcoin jokes stopped being funny. Like, you can't like, oh, haha, like, let's invest in Bitcoin. Like, that's not going to make the boardroom laugh. Like, everyone now seriously considers investing in Bitcoin on some level, or at least they know it is a serious investment path, and like they might just not agree with it or have the appetite for it. But yeah, it definitely remains an asset that should be more competitive with gold and silver. And it's kind of like the efficient market hypothesis. Like, the only reason that would explain why Bitcoin's price is the way it is, that most people in the market just don't fully understand Bitcoin. Otherwise, if everything was understood, the price should be what all us Bitcoiners suggest. It would be like, what, $1 million a coin, whatever it may be. But I think the second thing too is, you touched on this in the beginning, and I really liked it. It was kind of like our expectations. you were like, oh, I don't think we're gonna hit 100,000 because like the money's gonna come. And I very much kind of am coming from a similar perspective to you, Julian. Like, I remember when 2017 was kind of like when I was like, whoa, what is this Bitcoin? And it seemed like in 2017 everyone was talking about Bitcoin, and Bitcoin was still so new. Like, we didn't have Lightning, we didn't even have Liquid or Segwit. No, like Bitcoin still had this like unknown characteristic to it of like its unknown potential. Later at the end of that year, we started seeing options. Now we have ETFs, we have treasury companies stacking it, we have, government treasuries kind of on that path. But in 2017, all that seemed like potential, and just the idea of that potential seemed like it was enough to drive the narrative, drive the price. But now it doesn't seem like this potential of what Bitcoin could do. Like, sure, like we're kind of more waiting for the actual realization of that potential now, and that seems to be what's driving price. So kind of like we had a little bit of hype kind of coming in to Bitcoin's price through the potential Trump trade and the treasury play, but as that didn't get realized, we saw that pull back, and that could always happen again. But now we need action rather than hype to kind of drive Bitcoin's price further up.
Yeah, I just want to make one note too about going back to what Forrest and Julian were talking about too. But it's important to realize that Bitcoin, although it's not a fiat currency, it exists in a fiat world. So there's lots of people that are desperately playing games with their dollars, just trying to keep the value in them. You see it everywhere in the market with things like GameStop and the pricing of housing and all that stuff. But a lot of the market is just driven by mania and people following the trends. And a lot of like short-term gamblers and traders are like driven to the volatility of Bitcoin. And because it's a new asset, it's going to see a lot of volatility until it matures. So it's about like separating the signal from the noise, and how much of the price action is just those short-term traders and how much is the base use case of Bitcoin going up over time. So I think that's important to try to suss out, especially when the market's doing crazy stuff like it's doing.
Yeah, and just to touch on that point too, I've had a lot of experience in the last couple of years just talking to a lot of people about Bitcoin, and it is like I was amazed on how early we are, because even amongst people who are interested in Bitcoin, they still don't really understand what it is, their properties, or how it even works. A lot of people who are interested in Bitcoin don't even know that we have the Lightning Network, and that's from the people that are interested. But like I said, I've been having a lot of conversations lately, and people don't really know even what Bitcoin is. They might have heard it before, but we're still very, very early.
So with these folks that are interested in Bitcoin, like, and I think most of us who have talked about Bitcoin, anyone would get a few of these folks as well. Like, what's stopping these folks from investing in Bitcoin or buying Bitcoin, hodling it? Like, what are their barriers? I've seen a few. I've seen one where like the security or the difference of Bitcoin between regular assets seems like it's something that could be a barrier. Like, are you seeing any specific things that are creating like barriers for folks adopting Bitcoin?
Yeah, I feel like a lot of people don't fully understand what Bitcoin is backed by. And so I get a lot of those questions. They say, well, we have, fiat money, we have physical money, and it's backed by something. And then, they start asking me about what is Bitcoin backed by? And, like my short answer is usually, well, Bitcoin's actually backed by energy. Your fiat currency is actually backed by armies, by the government. And so Bitcoin is actually safer than fiat currencies because it's actually backed by something tangible, which is energy. But even that concept seems very hard for people to understand.
Yeah, Bitcoin. What is Bitcoin backed by? What is fiat backed by? I have a bit of a different answer. I tell folks they're both backed by nothing. They just are money. Like, it's kind of money is almost like a story. I don't know. Maybe I don't have the best approach of explaining some of these things to some folks. I find that sometimes I scare folks away because I'm so worried about all the things that could happen, like how money dies. Like reading about fiat money in like Austria and Germany, and then in the 1920s. Just seeing how people could be financially comfortable, and then there's an inflationary crisis, and all their assets are incredibly devalued, and they basically become like poor within like a few weeks, and that's like a terrifying reality. And that's kind of one of the reasons why I want to get everyone not just buy Bitcoin, but have it in self-custody. Because if we have any of these kind of crazy scenarios, the banks are probably, or the exchanges that custody one's Bitcoin are probably going to, hold on to that Bitcoin, give it to the government, another 6102 attack type situation. And like, then how do we get people to buy Bitcoin and get it into self-custody if they're new? Because it seems like there's so many technical barriers. It's like you have a seed phrase to remember. It's like, don't forget these 12, 24 words. And seed phrases are a huge improvement. Like I came into Bitcoin and started self-custodying right after seed phrases. Anyone who's more of an OG would have like a private key for every public key pairing. And that seems like a huge headache. So like, can we have that same kind of orders of magnitude improvement where like a seed phrase gives you essentially unlimited public keys? So like one private key now gives you infinite public keys. We have like 0 private keys give you infinite public keys. Like, and I say like 0 private key on more like the way, like on an interactive level. Like I don't interact with every private key anymore. I just have one master private key that kind of handles all of that. So like, what do you guys think about private keys, like the seed phrases? Do we think that is like a barrier? Do we think that's the best way that we can get folks to self-custody? Is the bit key a viable alternative? Is there some sort of like biometric situation that we can kind of use, like a fingerprint or like an eye scan to kind of like represent a private key instead? Like how can we make self-custody easier and less restrictive for a newcomer?
I'll chime in on this. I'm a big fan of Blockstream's approach in that if it's a vault, if we're thinking of self-custody as a vault, then you can add layers to that vault. You can pick how long you want your PIN code to be, or you can pick how many doors you want in the vault. And I think like allowing people to self-custody in an environment where maybe they don't see their key right away is okay. But having a UX that encourages them to be like, yo, take the extra step. Like you're using this as a savings account, like take the extra step. Similar to what we do with password security, I think is the model.
Mm-hmm.
I love that. It's just like, I don't think that the seed phrase is the first step to self-custody. I understand that you don't really own your Bitcoin unless you have your seed words, but you have apps that just do it. They encrypt the seed words pretty freaking securely. And then if you want, you can write them all down. The app wipes them from existence. And essentially you have the seed words, and then you can link a signing device to that. And then you could do a Shamir sharing thing, or you could do like a multi-sig setup from the start. But I don't know the technicals of it, but I just see like that's the path for getting more self-custody. It's got to be like instant out the gate simple, and then the UI is what pushes you to use the more complex security methods.
Yeah, I think it is a bit of like a process. You go from step to step, and I even did this as well. Like, you create a software wallet. Maybe it's even a custodial wallet. You don't really understand that you don't have ownership of it because you can see your Bitcoin there, right? Like even in an exchange, right? Like it's more common now for people to be aware that they don't own that when it's on an exchange because of things like FTX, right? But back in the day, you just, oh yeah, I own Bitcoin, but really you just have a Coinbase account and you have some exposure to a Bitcoin claim on there. And then I think for me, it's like, it's about learning all of the steps, because your Bitcoin can be really secure, but there's a lot of steps in between that. You can go to a hot wallet like Aqua or Sparrow, software wallet with 12 words. You can add a passphrase to that. You can get a hardware wallet. You can do a multi-sig. You can do mini script to time lock it. You can do all, like you can go from really simple all the way to very advanced, and within there is fairly secure to very secure. But it's really about willingness, I think. And I think a lot of people are not really, they don't care enough about it to go down the road, or they get in. The other problem too is that people get very enthusiastic about Bitcoin really quickly, and then they want to move to a very complex, what they see as very secure, like a multi-sig. I get contacted all the time. Oh, how do I set up a multi-sig? Well, do you own any Bitcoin? No, I haven't bought any yet. Okay, well, you should not be thinking about multi-sig yet. You should learn how to send a transaction, how to secure a simple wallet, understand what a seed phrase is, what a passphrase is, what these things are. Like it's a I think there's probably been a lot of Bitcoin lost from people having too complex of a self-custody. So we need solutions like BitKey. I don't really personally know that much about BitKey. I think it works pretty well, but I think not being super interoperable with the other common hardware wallets is a question I have about the usefulness of that or longevity of it. But I think like every other solution for self-custody, there is a person where that is the perfect fit, and each iteration of self-custody or type of self-custody has a person that is either at that step of their self-custody journey, or that's maybe where they end. But yeah, so there's no perfect self-custody solution, and it's an education. It's a journey of education to get better self-custody, and to be secure with that, and not worried that your setup is insecure as well.
Yeah, I think I'm hoping for an easy answer, like, oh, all they gotta do is download this app, and it's like it's easy and it works for everybody. But you're right, like it really is, like everything it depends on what the person wants, and I think that's one of the reasons why Bitcoin Well is kind of thoughtful in its design of like not necessarily pushing super hard a wallet or a brand of like devices, because every person's situation is unique. Like some folks may want to have something super simple. Maybe they want their like if you're making your first purchase, you probably don't want it to get to a multi-sig because you might not be able to move that Bitcoin again. But if you just put it onto your phone wallet, it would be nice if there was some sort of like, hey, like this is your first Bitcoin purchase, like if maybe the Bitcoin wallets had some sort of like educational option to kind of help folks like with that, oh, like your password might not be that secure, kind of or I think it was Julian that was mentioning like the way that passwords kind of suggest improvements if they like know your password is easy or it's been detected to be vulnerable or exist on a third-party site. And because like some wallets it seem like they're just taking your Bitcoin and it just sits there, and like if it's a new person, like I've got new people, they buy Bitcoin, it sits on their phone, and I'm kind of like, I'm trying to water that orange seed, trying to get them to think about Bitcoin a little bit more. Their phone gets stolen. They lost their they lost their Bitcoin, and it's like $100 worth of Bitcoin, and they're just like, oh, screw it. Like if I lost my phone and I had that money in a bank, like I would just call the bank and then like they'd give me my money back. And I'm like, well, yes. And then there's kind of like the personal responsibility angle. And then I think that like the value, like valuing the personal responsibility, like I feel like to some folks that seems like a burden if you don't have any reason to want to self-custody. And I think the folks that really value it are the folks that may have had it like I have like family that comes from a communist country, and so I hear a lot about like you have like no private property, and like the thing like you're kind of secondary to the state, and the valuing individuality and private property was a lesson that was learned as like my family left the communist country of Poland and then came to Canada in the West, and like, oh, we should have like a little bit more personal responsibility. We do have that here, and it leads to like a little bit better lives. So like I think some folks are just born into a really privileged situation. They maybe have families that have good jobs, good businesses. They haven't really had any kind of income volatility or property volatility in their lifetime, so they don't have any reason to think that things could go wrong. An interesting story, when I was working in a bank as a teller 2017 as well, I was super excited about Bitcoin. I was talking to everyone about it, and nobody wanted to hear about Bitcoin, right? This is like it was new, right? 2017, most people think it's just some like dumb internet money. But the people that were the most interested in Bitcoin completely shocked me. And this taught me a lesson. It's kind of why I'm explaining Bitcoin in this perspective, is because it was the silent generation that was most interested in Bitcoin. They loved Bitcoin because it wasn't government controlled money. It existed outside of the government. Why do these people fear government money? Because they lived through the Great Depression. These people would come into my bank every week or every month and withdraw all their money in cash and keep $0 in the bank. They were cash on the mattress types folks. And yes, they're paying a huge inflation penalty for holding cash and not investing it into productive assets. But they were so afraid of having their money seized and like the banks failing and losing all their money that they refused to trust them again. Kind of the way like my family kind of refused to rely on the government for like stability and income preservation. So I think I would love to hear your guys' perspective, because all of you guys are very seasoned Bitcoiners, and I'd love to know, like, did you have a similar kind of perspective of like in hindsight, you're like, oh, if I had Bitcoin or if I had a more private system, this would be better? Like, what do you guys think helped Bitcoin click for you guys?
I think your background, I love that perspective about the silent generation. I think that plays a big part of it. Like, I know people, firsthand who come from inflationary countries usually get the store value aspect of Bitcoin very quickly. And then people who need it, who do a lot of remittances, like it connects with them on that level. And I think you're right that we live in a pretty privileged time, and we live in a world of slow creeping inflation and not sudden inflation. And you might not see the value in a really finite asset. But I will say this, like back to the wallet thing. I noticed there was a big trend for a while with all social media accounts of like max convenience when you sign up. It was you use your Facebook to log into 20 other different websites with like or sign up with the Facebook button. They removed that on a bunch of websites recently. And now I don't know about you guys, but when I go to Messenger, it doesn't let me use Messenger without like a 2FA now and a PIN. And I noticed that like Twitter got like that too, where now in order to use Twitter messages, you have to have like this encrypted version. And I'm feeling that as we move into this AI world where it's going to be hard to verify what's real that we're seeing on the internet, there's going to be an increased emphasis on personal security and verification before you enter these different destinations. And I think that actually works to Bitcoin's benefit, because if everyone is forced to understand security practices in large a lot more when they're using the internet, then the Bitcoin seed phrase thing's not going to look like as big of a barrier. It's just a slightly different system. And there might be ways in the future, and you would technically be trusting your keys to another party, where perhaps you have a multi-sig with your Bitcoin wallet, and one of the keys is just tied to your social media profile, which you have a whole other set of security with that you're used to using. I think that's kind of a promising or neat setup. Imagine if your Bitcoin wallet, one of the keys is your Facebook login, one of them is your BitKey, and then one of them is a phrase that you have. And if you have two of them, you're good to go. I'm just spitballing here, but I think that we're going to see different ways of approaching that UX that's going to make it a little bit more friendly and normalized to access. And then we're discounting, I don't think it's going to happen next year, but all these big tech companies, when they decide that they want to get into Bitcoin for whatever reason, you're going to see some really cool novel ways of exploring key ownership that we haven't seen before. It's just that we're not seeing all these brilliant minds in design from all these massive companies that have basically shaped our world in the Bitcoin space yet. We've got a lot of amazing UI, UX people in Bitcoin, but it hasn't reached normal people because there hasn't been like a need to incorporate into OS. I think Square is the first major company I've seen that's sort of been like, hey, everyone and anyone can basically have a Lightning wallet that has a business. And I think next step is, okay, Apple Pay might incorporate something like that down the line. It's not going to happen next year, but I think in the next 5 years, we see something like that.
That'd be super cool.
That's a really great example, Julian, because if you look at Square, that's exactly what they've done. Like their business is creating great hardware and software for businesses to accept payments with their merchant point of sales units. And they went into Bitcoin, and they've created the only, like, there's a couple other little unique ones, but like this is what Conrad brought up, right? Like, what do you think about the BitKey, right? Like, because they're doing something unique, like whether you 100% agree with them or not, but they have done something unique. Whereas all the Bitcoin or Bitcoin centric companies, like, it looks like an old calculator or like a little tiny USB stick. It's like not super iterative, right? Like these things are great, but they're not for everybody.
Like Bitcoiners are only thinking of one specific type of user,
Exactly. Which I think, that's just where we are right now. And I think until we get to that, the Tesla Bitcoin wallet or whatever it ends up being, I think having a variety of security solutions works for the vast majority of Bitcoiners. So like, just as you would have, if you had all your wealth and we had no Bitcoin, if we lived in a world with no Bitcoin, you might have a home safe, you might have gold or cash in there, you might have your wallet with a couple $100, a digital solution as well for some of your money, right? Just that's the way I think about my Bitcoin. I have a custodial wallet that I use Coinos. I have $100 of Bitcoin, 100,000 sats in there. If I lose that, it's not the end of the world. It sucks, but it's not the end of the world. It's super easy to use Lightning, Liquid, on-chain, whatever. Then I might have a wallet, a software wallet or just a hardware wallet for as if it's my safe. And that's a really, really easy solution. But it still takes like a technically minded person or somebody that cares a little bit more about understanding this, like the 12 words, seed phrase, all this kind of stuff. Like you have to be somewhat interested in self-custody of your Bitcoin. I think a lot of people aren't. I think the success of IBIT's or BlackRock's IBIT product is a testimony to that, right? It's the most successful ETF of all time. It's the #1 most profitable ETF for BlackRock. That is a custodial investment wrapper of Bitcoin exposure for people. So that's what the US and some of the market that can access that wants. So Bitcoin can be wrapped up in that way to give people exposure, but it also has the fundamental ability to be owned as well, the private keys, the ownership, which is part of what makes it revolutionary in my eyes, is the ability to have self-custody. I don't see a future where everybody will choose to have that ability, and therefore they will lose out on one of the key principles of or one of the key value propositions of Bitcoin. Like I think self-custody Bitcoin is actually worth more than the same exposure in IBIT, but that's because you can use it more than IBIT.
IBIT takes 0.25% a year too.
Exactly.
Yeah. And like that 0.25% a year, like, you know, Warren Buffett's the guy that always talks about compounding growth and like how that affects over a long period of time. Like if you're losing like 0.25 of your stack, you know, if you add that loss up, like over 10 years, that's like a massive that's like a massive fiat potential amount that you lost. Like the Bitcoin amount might not be super tangible, it's still going to be 0.25, but as that amount that you lost appreciates, you're like, oh crap, like I end up spending a lot on fees where I could have just maybe learned to like manage my words or manage the device a little bit more. And Julian, I totally agree that Bitcoin on your own self-custody wallet is worth more. I get some folks that complain that, you know, Bitcoin self-custody, oh, it's on a TFSA. And while this may be true, like you like we kind of touched on this before, and you definitely hear like Adam, our CEO Adam O'Brien, talk about a lot. Like Bitcoin is freedom. Like if you haven't had your bank account shut down, you might not appreciate true freedom like as much as someone who has. But you kind of don't want to have that huge burden of like that negative experience to teach you to value your Bitcoin a little bit more. Both Julian and Forrest, you guys were talking about kind of impacts of AI. I think it would be ridiculous to not talk about AI because it's been driving the markets, it's been driving the economy. I'm sure everyone here has been using ChatGPT on some level. Like, and also that's been driving like kind of the infrastructure side. You know, like Bitcoin miners are now kind of pivoting on some level to assisting out, you know, AI data centers to get those kind of spun up. And in one way, this is really great because Bitcoin used to be, I don't know if you guys remember, you know, 4 or 5 years ago, Bitcoin was going to consume all the energy of the whole world. Right, but that's no one even cares anymore. Like Bitcoin, no one even talks about Bitcoin mining as being a bad thing. It's all about AI. So I feel like AI is kind of taking some of the heat off of us. But at the same time, you guys were mentioning that it seems to be driving a lot of the investment in the markets over the last year, potentially even helping drive up some of the commodity prices as well, as it might be like see as potential inputs to that race. Do we have any thoughts for like how AI might be impacting Bitcoin in 2026? Julian's kind of talked about it being a security concern potentially. What are you guys thinking there?
One thing I'll say is I think AI, the AI build out and infrastructure has been a godsend for public Bitcoin miners. It's been an absolute bailout of a terrible business model. I mean, Bitcoin mining is incredibly difficult. It's incredibly competitive. And yeah, I mean, these Bitcoin miners have not really done that well, except ones that have sold their or have partnered with hyperscalers, AI infrastructure, and done sold their energy contracts and stuff like that to them, because it's that's where the money is flowing right now. So it's not just like retail, or it's not just investment as far as like your portfolio that has gone towards AI, but there's just a huge amount of capital spend going into AI as well, which floods into all of these different sectors. Yeah, I mean, I see AI. I see AI, and I see silver and gold as well as being shorter term plays. I mean, I think AI will be revolutionary, and it basically is to some degree, but I still would rather hold sound money than invest in something that's has all the competitive risk. Where do I invest in AI? Do I buy the infrastructure? Do I buy the chips? Do I get exposure to a chat bot? I don't know. It's too much competitive risk with that. Whereas all of that's stripped away with Bitcoin in my eyes.
I like the angle you're saying that how Bitcoin miners can kind of help balance the load in AI, because AI seems to be a lot more kind of like typical power consumption, where it has like the demand for it ebbs and flows, kind of like as like what people are doing. Like, are people awake? Are people working? Are people type querying? Or like at 4 a.m. there's probably a lot less queries, so those data centers nearby those population centers probably don't need to consume as much power, and they can offload some of that pre-planned power consumption to the Bitcoin miners. Is that kind of like what you were saying on how they kind of the two work together, or like what kind of angle were you suggesting?
Yeah, I mean, if a Bitcoin miner has a contract that is where basically they have cheap cost of electricity, but it's only when the grid doesn't demand it, then that is only suited to Bitcoin mining. That's not AI, as you said, needs electricity whenever they need it. If they have demand for it, they need electricity. So Bitcoin miners can turn on and off based on profitability. AI does not have that. So they're sort of, what I see going into the future as far as Bitcoin miners and AI go is some of the energy contracts that miners have will go over to AI because it suits that. They can have cheap-ish electricity and demand as much as they need from it. The energy contracts that are like solar when there's no demand on the grid, or wind when there's no demand on the grid and they turn on and off, that is really well suited to Bitcoin. So I think those stay with Bitcoin miners. And we develop a much more natural growth of Bitcoin mining, as opposed to just because there's other more willing participants that pay more for just a standard type of electricity.
Mm-hmm. Then I'm taking like a bit of a step back, kind of looking at some things. From Bitcoin Wallets perspective, it's been really cool. Some of the things we've been able to pull off in the last couple of years in Canada, like the way that you can buy, sell Bitcoin, Lightning Network, like fully integrated. Not really seeing that kind of like network level innovation or kind of an innovative adoption on some other platforms. I'm really excited to see how that's going to play forward. But as I think about like how adoption and how the technical adoption of Bitcoin, like like Liquid or Lightning, might kind of change in the future, I know that a lot of that adoption and newcomers tend to come in with price, right? When price is pumping up, a lot of new people tend to get excited and they want to kind of go into Bitcoin. So like looking ahead, kind of vaguely talking about price here, but more kind of talking about like, are we still seeing a 4-year cycle? Like we've been seeing that for as long as I've been in Bitcoin. All of us have been in Bitcoin. And that seems to be driven, like we have a pretty big rise up in price, and then kind of like a year-end sell-off, bit of a rotation in some of the altcoins. Altcoins seem like they've been heavily policed. Like we've had ICO police, and then DeFi and NFTs have been kind of increasingly policed for being illegal securities. Well, is there another cycle left? Like, do we have a different alternate asset to ape into, or is like the Forrest cycle in itself dead? Like, what do you guys think? And also the audience, I'd love to know if the audience has any questions as we're kind of getting to the tail end here. I'd love to know if we have any questions kind of regarding the 4-year cycle, or kind of anything regarding Bitcoin.
I'll say this on the 4-year cycle. I have become one of the non-believers of the 4-year cycle starting next year. I think I'm really, really bullish on 26, more than I was in 24, Ooh. More than I was in 25. Last year I was this bullish. It's probably like 23. 23 was a banger year. I think we did 20, or we did like 15 to 50 or something. I'm super bullish on 26 because we have rate cuts coming. We have all the nonsense politically and all the promises we're going to have to get on the table for the midterms. We have a new Fed chairman, first time in 10 years. The last time when Jerome Powell was nominated to be Fed chairman, Bitcoin was what, $300? And he's just been, he's been, I would say, in the grand arc of history, he will be seen as pretty hawkish, keeping rates this high. I think that's pretty defining, I would say, in this environment. He was the first in like 50 years to make a higher high on rates. We've just been getting lower highs on rates since the 80s. So I see rates going down dramatically. I think that will basically mean that a bunch of money that has been in these 4% safe bonds, if you got $1 million, you've been earning 40K a year pretty comfortably, that's going to get slashed down to 10, 20K. And then at that point, you got to ask yourself, what's the point? So much of that is going to flow into speculative assets. And I think that I'm very happy that there's a healthy amount of skepticism in the AI space. I will say, like any new technology, it'll get ahead of its skis. But personally, as someone in the media space, it's a massive game changer. The amount of electricity that me as an individual is using to just do any type of creative work, I don't know what it is, but I would say it's gone up by like a factor of 20. Like I use so much of this stuff in all the work that I do visually, and I know that there's other people, and we are on the precipice of like even more self-driving cars, which puts an immense load on the cloud infrastructure that runs the neural networks. We are on the precipice of these autonomous robots. So everyone's saying, "Oh, it's just a bubble." It's just like, yeah, well, it's gonna have its like little peaks and its troughs, but the amount of new technologies that are going to be built on all this stuff, we haven't even seen the beginning of it yet. And I think Chamath Palihapitiya said it really well in the last All In podcast. The big problem right now with AI is that it has like a really bad marketing image because people haven't been able to see the benefit in their own lives. They haven't been able to see, how does AI benefit me, the consumer? It's like, if this is so great, when do things start getting cheaper? And I think you're going to start to see that in the next year. As people adopt these things, you're going to see people who are really good at using them to cut costs actually cut their prices, and prices for things might get a little competitive even in fiat terms. But I'm getting carried away with my bullishness. I think 26 is going to be a really good year, and I think the 4-year cycles become less impactful because the halvings become less impactful over time. There's just not much Bitcoin. There's 1 million BTC left to mine. MicroStrategy as one entity is almost like 70% of that. That's 1 million Bitcoin till the end of time eternal left to discover. So I don't think it's that much. And I also think that, you know, people, when they decide that they're going to make an allocation on things, they don't wait for particular quarters, they wait for particular years. And I think we'll get a very good indication of what type of year Bitcoin's going to have after January. If we're down in January and February, I don't know, maybe I'm wrong, but I think if we have a fairly good January and February, I think that sets the tone for the rest of the year.
I'm a bit of an econ guy, so I love to talk about the rates, the rate cut up ahead and how that is making you bullish. Regarding your bullishness, we gotta maybe there's another bet in the future. We could wager a couple peppers.
Oh no!
And see what price does. But I think the rates is such a good point, and I think it's worth to take stock of what Bitcoin has done in an elevated rate environment. So I had this conversation with my neighbor who happens to be a gold bug, and he's like very pro gold, very anti Bitcoin. He made a bet with me saying like Bitcoin's not going to do well when rates are going up. And what do we see? We saw Bitcoin make all-time highs with like 50-year high, highs in Fed rates. So that kind of shows that like despite this kind of pressure on speculative assets and away from kind of riskier assets, Bitcoin still did extraordinarily well. So I'm kind of like mirroring your bullishness, I would say. Then in a lower rate environment, there seems to be nothing that would really kind of hold Bitcoin back, barring some sort of like massive factor, like something, I don't know, something has like, Donald Trump is like, actually screw it, I was joking with the reserve, like we're never going to do that. Here's a law that says we're never going to do it. Like that would be rough, but like barring any kind of like crazy event like that, I could see just, money flowing to the fastest horse. And as rates go down, that should be more towards Bitcoin.
Yeah, it's not just the rates either. There's the other side of what the Fed does is, they have a balance sheet where they basically print money to either buy assets or they allow those assets to roll off. Quantitative easing is when they're increasing their balance sheet. Quantitative tightening is when they're reducing it by allowing the maturity of these bonds to expire and not re-upping on them. And that's what, not only has Bitcoin gone up during interest rate increasing, but the Fed's balance sheet has been decreasing. So they've been doing quantitative tightening this whole time too, to try to compensate for what they did in 2020 when they just injected a huge amount of liquidity into the economy. So that stopped officially at the beginning of this month. And when you stop reducing your balance sheet, it means you're keeping your balance sheet steady, which is an increase from reducing it. So that's one way to look at it. So
Yeah.
and it's not historically, it's not unfounded to see them reverse course really quickly into just not just keeping it balanced, but quantitative easing. If anything breaks or whatever, right? So we could see something like that, and Bitcoin is a direct response to government or from money debasement. So it's going to see a huge amount of gain from that. And then one other thing I would just say here, Conrad, you mentioned this at the beginning that like Bitcoin's price has gone down this year, but it's not a big deal because you can buy more of it. And one thing I like to say is, when Bitcoin's price goes down, your wage goes up because your wage is in fiat, right? So you can get more sats for that fiat. And when Bitcoin's price goes up, your net worth goes up because your savings is in Bitcoin. So you win either way. It's just a different type of winning. And personally, I'm trying to take advantage of that as much as possible. Like this price is crazy.
Yeah, dude. But Forrest, that's like one of the greatest things I've ever heard. You're always winning. Your wages are going up or your wealth is going up. I absolutely love that. On some similar level, one thing I do is whenever the price of gas goes down, I'm like, like a little bit worried about the economy, but I'm like, well, at least like, you can drive for cheaper. It's kind of like on that level, like you get like some benefits and some, there's always a benefit to look forward to. One of the things that I'm looking forward to in 2026, this is maybe one of my bolder predictions, is that we see more checks getting sent out. Kind of what we saw during COVID, just straight up checks getting sent out. Economies, spending seems like it's getting a little slow. So like Trump said, like a $1,700 check to veterans. I wouldn't be surprised that like we see something like that happening to non-veterans. Maybe like a start of the summer spending boost kind of thing. And we'll probably see a lot of that flow into speculative assets. What you guys were talking about before, there's always the Wall Street bets trades, the GameStop trades. There's always gonna be those folks who are like looking to plan their next, like their next moonshot into some sort of options position or whatever it may be. But yeah, I wouldn't be surprised. I'm expecting more and more spending ever since COVID kind of happened. I was predicting like we were going to have UBI on some level kind of get rolled out, which would just drive monetary debasement even further, drive asset prices up even further. The good thing for that is that everyone who didn't have money for Bitcoin now has the money for Bitcoin. The problem is now that the music is starting to stop. So everyone's going to be racing for a chair. So you kind of have to dive into that a little bit faster. And that's kind of what I think would be also best for the economy, which sounds crazy, like a Bitcoiner talking pro UBI. But my perspective is like our economy and our debt system and our fiat monetary system is cooked. Like chat, we're cooked. There's no fixing it. I think if anything, just start giving out, like if the house is burning down, like start giving away your cookies to everyone and just send them out running so they can be a little bit more sustained when they're trying to find their next home kind of thing. So like if we are heading towards this inevitable hyperinflationary event, the best way to prepare populations for that is to spread out Bitcoin as much as possible, and UBI assists with that. So that's kind of my bold prediction. It kind of coincides with rates going down. It might be more of like a 2027 event if rates go down a little bit slower and they're still looking for further economic stimulation and rates already pretty near zero. Checks would probably be the last resort. But yeah, that's kind of one of the things that I'm looking for. Do you guys think that checks are coming, or am I just a crazy guy?
I don't know. I don't know. I think it's a little early. I think maybe in America there will be a couple one-offs. I wouldn't be surprised to buy votes for a midterm, a couple stimmies. But look, I think the way that you get Bitcoin into the hands of millions in self-custody is you market it, and you market it as the new savings account. We all know savings accounts have died long time ago with the crappy rates the banks gave us. No one uses them anymore except for people who can't do math, unfortunately. But they're back, and it's called Bitcoin. And you hold it, and it outpaces every other thing that you want to actually buy anyways. So you're just tempted to hold it even longer, right? People use savings accounts so they can save up for a down payment to get a house. Well, guess what? Your savings account will outperform real estate if you hold it long enough. So that's the plan, and I think that's the mission I have, at least for the new year, is like get that out to people. Get it? The average Joe, doesn't need to go and figure out a billion different stocks to buy and diversify and use brokers. It's like, no, there's a savings account. It's called Bitcoin. You put your fiat into it and you wait and you watch some videos and you chill. And you wake up 5 or 10 years from now and you're good. That's the mission. Bitcoin wallet's got to get on that mission too. I think you guys basically do pitch it like that, but it's the way, I think.
I love that, Julian. Actually, that's one of the things that I am always telling people. Bitcoin is not an investment tool, it's a savings tool.
Yeah.
Yeah, like I don't know about the other young folks out there or the folks in my generation, but I hear and I see data about like the amount of baby boomers retiring, the growing size of our pension group, and how the labor force to pension recipients is like doing one of these. And it's like, how are these like few laborers going to pay for this match of pension liability? And that's where I kind of like fear, like, we have money that we have to give to our government with every paycheck. I feel like those like government savings accounts, like I don't think we're gonna see any of that stuff. I don't expect to get a pension when I'm older. I think Bitcoin is my pension, so I definitely view Bitcoin as a savings tool. And I think like that also kind of helps bake in that long-term perspective. Like I have like a multi-decade time horizon with my sale. Like I'm not really looking to trade. So I like that savings account language because it really kind of gets everyone on that same board of like, typically people view the savings account even as like a video game, like just make that number go up as much as possible. I think you should seize and spend your Bitcoin when you get the chance. Zach, I'm just gonna throw you up there. You're getting an echo. Like you obviously want to be able to harness some of your Bitcoin and still live a good life. Like you don't want to just end life with like the highest score. Like you want to have like experiences, like the value in the amount of Bitcoin in your wallet. You don't want to die with like 1 million Bitcoin in your wallet unless you only ever pass that down to your family. But I think like the savings perspective allows people to kind of rewire their brain from like this like speculative asset and like a lot of work. Like to me, investing feels like work, but savings just feels like nothing. Like I don't do anything. Like you put $1 in the piggy banks metaphorically and like you're good. So I think savings is really how we kind of get the next generation of no coiners to have a better savings account.
Your grandparents crossed the ocean with the family ring. You're gonna cross time with the family Bitcoin, man.
I love that.
You gotta do it for the next generation. They're gonna want the ring too, but they're also gonna want to make sure you save some Bitcoin for them. So don't let those grandkids down. Get the family Bitcoin going now.
That's one of the things that Adam says. I love it. It's kind of like the same thing as like when you're playing sports, you kind of have like two names in your jersey. You have like your company name or like your team name and your last name. And your last name is like your individuality, but your team is kind of like the bigger picture. So kind of on that thing, it's like you have the bigger picture, which is your family, your future generations. It's not just about yourself. It's not about like just trying to get that new shiny thing. It's like you're setting up your future generations for a level of financial freedom, and financial preservation is kind of just the way I think of it, as like if you have like all of our comforts are threatened in a world of hyperinflation, and you might not want to have your family be like oligarch level of wealth. You might just want them to be able to retain their life of simplicity and happiness, and in a hyperinflationary environment that's stripped away. So Bitcoin can help preserve that despite a hyperinflationary environment.
Can I add on to that too? I've got another point that connects back to the whole backing of money by gold thing.
Yeah.
So like, what was the point of backing money? It was to tie it to gold so that you could slow the rate of its issuance to the stock to flow of gold. So you knew that they wouldn't just flood the market with dollars.
Mm-hmm.
Well, Bitcoin it's not backed by anything, but it solved that problem another way by locking in how much you could issue to a mathematical formula that can be verified by people all over the world. So I think the real question is, in the future, what's going to be backed by Bitcoin? Because it's much more stable, it's much more verifiable than gold ever was. And then just to tie that into one other thing about how bullish I am for next year, it's been fun to watch like silver and gold like going crazy recently, but gold and silver have like a dampener built into them. So like the higher the prices go up, the more people are going to want to mine it, the more profitable it becomes to become a miner, and they'll dump more of that metal onto the market. But Bitcoin, no matter how high the price goes and how many more miners there are, the issuance of Bitcoin is locked in to every 10 minutes, it's a set amount. So it's the price of Bitcoin can go exponential in a way that something like silver or gold just can't do. And I think we've seen so many things built into it this year in the past few years where it's getting adopted by a lot of mainstream and huge, corporate and banking interests and governments, that the price can go exponential now in a way that people I don't think are ready for. So there's my bullish prediction for next year.
And I'll add onto that, like time in the market versus timing the market. Gold spent like 15 years between 1700 and 1200. Be prepared for that with Bitcoin. The world might not get it for a while, but within 1 year, gold has done, or 2 years, it's done like 140%. And now it has outperformed the stock market basically since the inception of the stock market in just those last 2 years. It was underperforming the stock market until the last 2 years. And now it's like, well, you would have been better in that than S&P. So Bitcoin can make its moves very quickly. Don't try and, time it perfectly. Just keep accumulating, get that nice average. And then you're just going to wake up, a week or two will pass, go off grid, go on a hike. You'll come back and maybe Bitcoin has done 2 years worth of price action in a week, versus now where it feels like the last 3 weeks have just felt like 2 years.
Yeah, and Julian, I love the perspective you have of like just buy Bitcoin and like don't think about it. Like I think that's one of the things that I think you're correctly coming at this from the savings account perspective, because like you don't mess with the savings account, you don't do stuff, you just put money in it and like don't look at it. And that's the best way to think about Bitcoin. If you're thinking about Bitcoin as like an investment, you're typically always like your fingers on the sell button, like you're always like looking to sell to maximize your fiat gains, but that also just like causes stress. Like you could just have a good time. Like anecdotally for myself, I used to be a trader. Actually, my first job was actually trading as a Bitcoin trader for a small prop firm, and then that was stressful. Like I remember staying up all night, like keeping my computer open all night so I could execute trades. I know it was like it was a very productive endeavor, but mentally it was draining. And it's kind of like when you have like a video game and like you increase your stamina bar by like sacrificing your health bar. It's kind of what it felt like. And whereas if you're investing in Bitcoin or saving in Bitcoin, just throwing into a savings account, you're not sacrificing any of your mental well-being, any of your time. Like you don't have to constantly research reports, do what Warren Buffett does, always reading like quarterly reports. Like you just add to your Bitcoin wallet and just live a good life. And then that like the Bitcoin savings account will take care of itself in the end.
Yeah. Well, it gets you focusing on the next best investment, which is yourself, right? If you're constantly chasing other things to put your money into, you're probably not working on yourself well enough. That's what's going to actually build wealth. You can buy Bitcoin, you can stack it, but if you're scraping by and you're not using your time, your talents to the best of your ability, like you're never really going to be wealthy. I mean, you can buy $5 of Bitcoin a day, but if you only have $5, a day or a month to put into Bitcoin, sorry, Bitcoin's not going to save you. Take that time that you're not stressing about investing in other assets or thinking about, the next 100x, put that into yourself, bolster that skill set up. We're entering this world where competition to get any job is going to be exponential, but opportunity to build businesses will never be easier. We have all these like assistants and tools. So all that time you've saved thinking about gold and stocks and whatever, put it in yourself. And you're good to go.
Fantastic. So we got Steven here raising a hand. We got a couple of questions. Audience has been a little quiet today. I feel like we're just spewing out all this information. I guess we're answering questions as they're being conceived before they hit the chat. Let's see.
There he is.
Hey Steven, how's it going? Not sure if you're able to hear us or speak. I see.
Steven, you are muted if you can hear us.
Turn this mute off.
There you go.
Hey guys,
Hey,
how's it
Steven.
going? Hey,
Happy holidays. Thanks for tuning in.
Hey, I was just listening to you guys there, and you guys make the perfect platform for that, because when you're saving like that, now you guys got the account in Bitcoin well, so now you can just set that up, and then you don't even have to think about it. You can just set up a daily buy, and it just goes right to whatever cold card that you want to, and you literally forget about it. You never have to think about it. Myself, I take my whole paycheck and put it into you guys, and then just dollar cost average over the week, and then I get a new paycheck and rebalance that, and goes directly every single day. You don't have to think about the market. You don't have to think about, what Bitcoin's doing, even though us humanly wise, we mentally get a little bit discouraged by things, but just because you want to see green, but then if you're thinking about your future and saving, you really want the market where it is now, kind of thing, where it's lower. That same dollar we used to, at 100 or whatever that Bitcoin was at, and now we're back, you can buy way more sats for that price, so when it moves forward, that compounding is going to be insane when you're saving like that kind of thing. So
yeah, Steven, I love that, and I think Forrest touched on that a little bit too. It's like I think about like what 10% of my Bitcoin paycheck goes into Bitcoin, and I was looking at my Bitcoin payment that I got today, and I was like, oh, it's higher than it normally is. It has been the last few months, which is the factor of the price going down. So it just means more satoshis per dollar, which is a good thing for us Bitcoiners. Like we're not really looking to we don't want to pay more. We want to get more sats. So
It's like you got a raise, Conrad.
yeah, exactly. It feels like I got a raise. It's like, oh, okay, I didn't know that happened. And Steven, yeah, I love using the folks. If you're not familiar, what Steven is referencing is on Bitcoin Wallet, you can now add in dollars to an account balance. This is now available in Canada, and so with that dollar balance, you can select how often and when you want to buy. So if you can be like, I think I said like the other day, like a $2 daily Bitcoin buy, or like a $50 weekly buy, or however you want it to be, and then that transaction is automatically sent directly to your Bitcoin wallet. It just saving Bitcoin on autopilot. It just makes it completely, you don't really have to think about it. You don't even have to execute 20 transactions every few weeks. It just all does it by itself. And like, I think automating Bitcoin and making it like, so you can just spend less time thinking about it, more time living is a good thing. Thanks for sharing, Steven.
Hey, no problem, guys. That's kind of the thing I do. And then, the beautiful thing about Bitcoin is, listening to you guys earlier there too, is like, 2026, I'm really positive for too. You got the big, beautiful bill that's kicking in, which gives everybody that used to do overtime, just never did it because everything would just go to taxes. Now you got all that money that you get without paying taxes in the US side of things. So I can see that extra money that's people's pocket. They want to, once they get their bills covered, then they'll start investing into more Bitcoin and into savings. The other thing I look at as well is I'm hoping that Bitcoiners that have sold their Bitcoin through this drop and through, the government shutdown and things like that happened, that they remember that it was their Bitcoin that saved their ass kind of in the end, because it's tradable 24/7. That's why we get these big pullbacks, because that's the only thing you can access on a weekend to get some money to cover your butt, So I'm kind of hoping that people will kind of remember what saved them, and they'll start piling back into Bitcoin as they start getting ahead on their bills and stuff again. And the best time, again, is right now when you got Bitcoin going flat right now, which is just building up energy, ready to take off, is the way I look at that chart. And 99% of that's usually right. Kind of thing. We're getting kind of to the spot where if you get on a weekly, you can kind of see a double bottom too. So, and we haven't done a lower low in the daily chart. So Bitcoin's still an uptrend.
Bring on a lower low. I'm waiting. I'm hungry. back to 15K, man. I want more sats.
All right, Steven, thank you so much, man. Evan raised his hand as well, so Evan, you can go ahead.
Yeah, sorry. First, I just wanted to mention that I was being denied the ability to enter a question in the chat as a viewer, but I'll just ask it in person here. Forrest was alluding to this notion that Bitcoin mining companies follow largely an unprofitable business model, and of course, companies that follow an unprofitable business model will eventually die. So I'm just curious, and anyone can answer this question, but my question is, like, as the block subsidy continues to approach zero, like, what does Bitcoin mining look like in the future? Who are the miners? Where are they? Thank you.
I did just want to clarify. I was saying that it's a very competitive business and that a lot of the public miners are paying too much to mine Bitcoin. So some of those will have to reconfigure their business to remain profitable or to become profitable at some point. But I'm happy to hear the answer to this question as well from somebody else.
I'll just say that like the value of mining machines trend to zero. Like people are literally giving away 3-generation-old machines for zero. And if you have zero for your cost of electricity, then mining is profitable. So you're just going to find all those things connect. And I don't know what that does to the hash rate. But like if you have free mining equipment and you have free electricity, then you plug it in. Like that's free money. And that's just going to be where the mining activity moves. I think that the whole thing with a lot of these hyperscalers working with Bitcoin miners to do these build outs, I think you're going to see I would hope, I could be wrong on this, but I think there's going to be a lot of political pressure, especially in the midterms of the next election, to lower permitting requirements to build new electrical build outs, whether it's for hydroelectricity, solar, or nuclear. Because America and I would say North America broadly is losing the power generation war to China. And I think if you understand history, you understand that the country that can produce like the most electricity wins the productivity race, and that turns eventually into the power race. And America has just been very slow on their build out, but I think that's going to change drastically. I think there's now just a very clear demand center for all this new electricity. As that drives the price of electricity down, I think mining actually becomes viable. And I think as more Bitcoiners become involved, you're going to see small bits. Like I think the rise of Ocean Pool is pretty remarkable. Like that was a nothing pool. And I don't know what it's now, but it's like, is it 0.5% of hash rate or something? And I would say, a lot of that comes from a lot of distributed lotto miners. So I see it working out. But I see the people getting into mining as basically being people who have free electricity, or huge warehouses that can get very low prices.
Yeah,
2.2% is what Ocean is.
Of the entire hash rate.
Yeah.
Wow, that's more than I thought.
The vast majority of that is using Datum instead of Stratum, which allows the actual hashers, like the miners themselves, to construct their own block template, which is one of the centralization points of mining that people have contention with.
Wow. So there you go. I think it's all moving in the right direction.
Yeah, and like also like mining is such a unique industry and market. I'm kind of coming at this, I guess, how I usually look at things, which is like a book nerd econ kind of guy. And so like a couple things that like just straight up that set mining apart is that like you as a miner within a pool, in the long run, you actually have guaranteed revenue, which you can't actually say for any other business. Like we're not talking about guaranteed profitability. We're talking about guaranteed revenue, right? So there's a cost side of the equation, which is fixed costs for capital, and then operational costs, which is mainly just electricity and any kind of like maintenance staff requirements. And then there's the income side. So that income side is guaranteed. And if you're able to lower the left side of the equation, I mean the cost side, then yeah, you definitely have an opportunity to kind of make money. And then there's kind of one other side too, is like if you're a power producer, you kind of have a different relationship to the cost of electricity than other folks, because you understand, like if you're the producer and distributor, you can like actually pay money to kind of send electricity elsewhere. Like if anyone who works in energy trading contracts across regions, you might know that like, yeah, like if it's raining in Quebec and they have tons of hydropower, like that town, if it's raining in Quebec and they have hydropower and everyone's asleep, like that area cannot consume electricity. If they want to ship that electricity across like a data center in New York, that's a massive power loss. There could be, if anything, negative costs incurred on relaying the electricity across. So even if you're potentially mining at a loss, that could actually be relatively profitable or relatively positive compared to some of your other options. And I think on the other side too is like, as Julian talks about in the increase in electricity production and in the United States, one area that is like, a very possible avenue for that is nuclear. And nuclear is going to have an overproduction capacity or overproduction issue almost right out the get-go. It's almost impossible to perfectly satiate the production of nuclear power plants. And Bitcoin miners will very likely be kind of seen as a productive energy sponge for that excess kind of energy situation. And I think one thing that we're starting to see as Bitcoin mining becomes more and more, it's consolidating. The bigger companies are typically getting bigger. I think we'll start to see that consolidation overlap into the energy side overall. So energy producers or infrastructure companies in the United States will either have direct relationships or will be bought out by the Bitcoin miners, or they'll buy out the Bitcoin miners, and there'll be kind of like a marriage of the two. And that will increase efficiencies even further, because as we kind of start to consolidate and get bigger and bigger and the market matures, being able to be more efficient on the cost side is going to be more and more important for longevity and for surviving. And like Julian, we were saying, they're giving away some of those S9s, but I swear I read something a while ago, and this might be out of date with the hash rate at its current levels, but it was like 30% of hash rate was still operated by S9s, which is like crazy considering their hash rate is so low. But it's more just because, yeah, if you're someone that has a connection on energy, or if you're an energy producer and you have like extremely low cost energy, then your marginal costs for your operational costs are near zero. Your ability to scale up is near zero. So you can basically keep scaling up as long as you have excess energy, and then you can monetize that. So I don't. So the original question was, what do we do when the mining reward hits 1 sat? Well, 1 sat is still positive revenue, and that's just a subsidy. There's still the fee component, and we've seen at times the fee component mainly due to short-term fee spikes due to NFTs, but we have seen already instances where the fee has exceeded the subsidy, and that will without a doubt be the case when the subsidy is only equal to 1 sat. So I think one other component there is, by that time, which is like I think maybe like 90 years in the future, the price of Bitcoin is very likely to be much higher, and the on-chain demand is probably going to be higher as well. And that would if anything, have to subsidize the. It's not subsidize, might be the wrong word. That would have to pay a larger miner fee to the miners. So I guess that's kind of my perspective there. Is that like basically the consolidation of the industry will kind of spill over beyond Bitcoin miners into the energy sector, which will create additional efficiencies, which will help those companies kind of remain profitable for longer. And that will coincide with the rise in Bitcoin price, which will basically keep mining afloat at a very slim margin. Like any one of us could have mined Bitcoin profitably a decade ago, but that's nowhere near the case today. The margins are just super competitive. We can mine Bitcoin for altruistic purposes, but not necessarily for profit motivated purposes.
Yeah, I mean, you guys summed it up really well. There's a lot of excess energy already, and will be a lot more energy produced, and Bitcoin mining has a place within that somewhere, sucking up being a buyer of excess electricity and cheap electricity sources. I think there's also the other side of it too, where electricity that goes into these miners, the energy going in creates waste heat. So there's the potential to utilize that heat, which hasn't been done like at all basically at this point. But if you're using resistance electrical baseboard heating in your house, you might not be profitable running an S9, but it's at least you're getting something out of it, which is subsidizing the cost of heating your home. And that's one use case, but there's industrial applications for heat as well that could be Bitcoin mining could be used for that.
Forrest, I absolutely love that, and that's actually a thought I've been having for a while. So in Canada, if for our American listeners, I'm not sure how you might be familiar with some of Canada's Arctic and Indigenous issues, but basically Canada has a very low population density in the Arctic region, in the Arctic islands. They want to establish sovereignty for nationally competitive reasons, and the way that this is done is typically by subsidizing residences of mainly Indigenous peoples in the Arctic. And one of the problems is, if you've ever seen in these posts on the internet, these the cost of living is insane in these places. For example, I'm just gonna pick an object at random. This is like a can of Celsius. You get this at any grocery store for like $2 US, $3 Canadian dollars. Something like this would be like $20 a can in the Arctic, like just because everything has to be flown in. There's no opportunity, because you're in the Arctic, there's no opportunity to develop a lot of your food sources locally. And one of the things that I think would be terrific is if somehow you can marry the excess energy potential of say, oil reserves in the Arctic, use the excess heat from the miners to fuel heat for the greenhouses to actually locally produce food in the Arctic for the very first time since the Ice Age or whatever. So I think that is like the heat applications and the additional externalities that we can capture from Bitcoin miners is something that we're still just starting to realize. You know, some folks have heated driveways, they heat their hot tubs, but on like more like municipal or like more state levels, I think there's a lot of opportunities there. The one that I just mentioned, I'm super passionate about because I think it solves a lot of Canadians' sovereignty issues and helps out the Indigenous people. So I think that's super exciting. But yeah, I think we're going to get ready to wrap up. But if anyone has any closing notes or remarks, we'd love to hear from you guys. If you're interested in following more of these thought leaders in this space, follow Julian Fagora on Twitter at Kinetic Finance and Forrest Hoddle. You can follow on Twitter as well. Definitely follow these guys. I love watching their videos. I've been in the Bitcoin for a while, and I still learn something every time I watch their videos. And they're also like, you know, pretty entertaining. Julian's latest videos are like hilarious and educational. And Forrest, your videos always make me think more about Bitcoin in something that I thought I already understood and figured I had figured out. You give me so many more questions to ask and answers as well. So yeah, if you're in the audience, definitely make sure to check these folks out. Julian, Forrest, do you guys have any closing remarks for us today?
Happy New Year's, guys. Do we have price predictions for next year?
Oh, okay. Gosh, let's see. I'll think about it.
Financial advice. Actually, it is financial advice. Sue me. I hate when people do that whole like.
You know what, guys? I'm just gonna be the one that's gonna say it. 1 Bitcoin equals 1 Bitcoin, and so that's my prediction.
I don't know. I think 1 Bitcoin equals 100 million sats.
Oh,
It's my prediction. No. I think I'm gonna say 170. Feeling 170 next year.
I'm using some nonsense. I'm looking at 202, so basically 200. So that's where I'll sit for mine. 202. Sorry, Julian, what's yours? 176.
170 is what I'm feeling.
170. Okay.
Yeah, we're going way up. I don't know. I don't have a price prediction, but it's definitely higher. I didn't really mention this when you guys were talking about it, but I'm super bullish for 2026 as well. My price prediction was wrong. I said 150 for this year. I think a lot of people did 150, but yeah, I'm not making that mistake again. I'm not doing another price prediction.
Okay, Zach, what do you got for us?
Higher. Yeah. No, I'm thinking 200K, but who knows, man? I don't like to predict the price. Like I said, just buy and hold it, man. Relax.
Yeah.
Yeah, buy, hold, relax. But if I'm right, I get to brag about it. And if I'm wrong, no one will know because no one is remembering that.
It's infinitely more valuable than any pieces of paper or digital units that can be printed at will.
Yeah.
Oh, if you're in the States, do visit a local Federal Reserve branch. It's one of my favorite experiences. I'm a huge nerd, but I love visiting Federal Reserve branches when I visit the States because they have this really cool thing where you can see the dollar. They'll have the framed generations of every bill, and you can see before the 1930s, it says this is fully redeemable for gold. Like you can just like the way it would work is you would hand someone $5 and it would give you the dollar equivalent of gold and just like put it in your hand and they're like buy. Like that's what the banks were mainly for. And it's cool seeing that like move away. And now it just says that this is legal tender. So like what that means nothing. Real money doesn't need to pretend it's real. It just is. Alrighty. Thank you so much for everyone that joined in. Julian, Forrest, you guys have been fantastic guests. I loved having you guys on. I love chatting with you folks. And Zach, Louie, thanks for helping out. You guys have helped make this smooth. And I also love you guys' insights there as well. To everyone in the audience and to everyone who's watching this in the future, thank you very much. If you guys have any Bitcoin, if everyone watching in the future, let us know your Bitcoin predictions down below. We'll see who's right. We had a higher bullish 202 and 176. So those are kind of all of our numbers out there. Let's see what we got. It's been a great 2025. Looking forward to doing this again next year. We'll see what we have to talk about next year.
Happy New Year. Lock in, guys. Lock in.
Yes. Get locked in. Wicked. Alrighty. Thank you so much, everybody. Take care.
Thank you, guys. Have a great day.
Bye, guys. Have a good one.